This week, reverse mortgages are being used to help homeowners avoid canceling their permanent life insurance policies.
Click on the banner above to learn more about our sponsor, Fairway Independent Mortgage.
Welcome back to the Industry Leader Update. You have to tip your hat to our fellow reverse mortgage professionals up north. Canada's Home Equity Bank is leveraging its CHIP reverse mortgage, once called the Canadian Home Income Plan, thus CHIP, to help retirees strengthen their insurance strategies. But whoa, wait a minute, you may say. Aren't lenders prohibited from cross-selling both reverse mortgages and insurance products, much less ever slightly brushing against the subject? Well, yes, certainly for U.S. lenders and originators, but let's go back to our story from a recent column that I came across on the website Wealth Professional Canada. It says that the bank struck upon strategies that were born from the analysis of several insurance agent inquiries received by the bank's wealth management division. And what they found is certainly not unique to Canadians. The wealth division was contacted by numerous life insurance professionals who had well-established agencies. In fact, most had hundreds of previous and current policyholders or clients. In life insurance parlance, that is called a quote-unquote book of business. Now, the bank learned that the agency, many of their older policyholders are unable to continue making premium payments. And as a result, those agents spend a significant portion of their time to help conserve policies. That is, to find a way to keep it from lapsing. In addition to this, the underlying benefits in these legacy insurance policies that these agents were offering tended to have more benefits than similar policies that are issued today. In short, they are well worth keeping, says columnist James Burton and Darren Mate in the column. Now, having worked myself as an insurance agent and a life insurance professional, many of these policies in danger of lapsing were likely permanent cash value life insurance. And those contracts build up cash value over time and typically insure the policyholder until the age of 100. Whole life policies certainly cost more than a term insurance contract. Therefore, it's not uncommon to see someone who has invested tens of thousands of premium dollars over several years in the hope that their family or estate will be paid their death benefit. Now, those who are unable to afford those premium payments, they face a policy lapse, and that is a significant financial loss. In most cases, a policyholder only recoups just a portion of the premiums they paid, while the estate or heirs lose the death benefit in the lapse. Now, here's a short clip from a Home Equity Bank webinar training describing the strategy to save an in-force life insurance policy.
Insurance and our engagement of insurance advisors comes in many different forms, of course, because we're constantly learning from them. The primary reason that we find insurance professionals coming to us is effectively maintaining a book of business, preventing existing policies from lapsing.
Andrew Cairns, National Lead Wealth Management at Home Equity Bank, told Wealth Planner, essentially what we can do is provide cash flow to keep the existing book of superior insurance products in force, as opposed to clients either cashing out or lapsing their policy. As much as we would like to see a 7-year-old qualify for a new insurance policy, they don't qualify in quite the same way as they used to when they were in their 30s and 40s. Now, I want to add, not only that, retirees face a myriad of financial uncertainties, including healthcare costs and long-term care. And how likely is it that a 70-year-old would be approved and pass the rigorous medical underwriting process? Not much. Now, reading the column, I began to appreciate the pragmatism of taking a portion of a home's value that may have increased over, let's say, $500,000 in 20 years, and using it not only to ensure that the original state plan is met, but that it is once again realistic. In one hypothetical example, a 65-year-old male has a life insurance policy with a $400,000 death benefit that he purchased 20 years ago. If he let that policy lapse, his estate's ultimate value would suffer significantly. So, what does Home Equity Bank's strategy have to do with us? After all, we cannot recommend or sell life insurance, and you would be most correct in saying so. However, we can appreciate the incredible flexibility of reverse mortgage, perhaps in ways that we never considered before as a reverse mortgage professional. So, do long-term insurance agents in your area find many of their older clients are letting their policies lapse because they no longer have the cash to pay the premium? If so, perhaps you can share this story with them. Now, they cannot use loan proceeds to purchase life insurance, but they certainly could preserve their policy and estate legacy by improving their cash flow and eliminating a mortgage installment and other debts. Now, perhaps an old dog can learn new tricks after all when it comes to discussing the potential uses of a reverse mortgage. Of course, here's an obligatory word of caution. Do not give unlicensed financial advice. Now, this presentation is only for educational purposes and opening possible avenues of discussion about how some homeowners could use a reverse mortgage or improve cash flow to save a policy. So, what are your thoughts? Have you ever had a client use their increased cash flow to avoid having a life insurance policy lapse? Give us your inputs in the comment section below, and thank you for watching. By the way, share this video with other reverse mortgage professionals on your LinkedIn and Facebook profiles. We always appreciate that. And subscribe to our YouTube channel and hit the notification bell. That way you never miss an upcoming episode. And this week we have the latest edition of our weekly podcast, Heckin' World Weekly. And we're going to learn just how dramatically Google searches for when will the housing market crash have grown in just 1 month. Listen to Heckin' World Weekly on Heckin' World or subscribe and listen on iTunes. That's it for this week. Thank you for spending just a few minutes with us. Have a great week.